Let's get across today's market moves with Ingrid Willinge. And Ingrid, did the rally in US futures help the market today?
Look, we had a solid day, Ed, but it could have been better given what we saw from US futures rallying thanks to Nvidia reporting a boost in its first quarter sales. Chipmaker Nvidia giving a positive revenue forecast for the current period. That's even despite a slowdown in China. In fact, sales expected to be up about $45 billion in the second quarter, including about $8 billion in revenue lost from China. That includes, of course, that number. So not a huge impact as well from the federal court ruling the US reciprocal tariffs illegal that you mentioned before, Ed. Though the oil price did rally a little on the news and the Aussie dollar dipped off strength in the greenback. That being said, Australian share market ending this session, you can see there, up just 0.2%. Looking at some of the best performers on the market today, and the tech plays did get a nice boost from Nvidia with Appen closing. You can see they're up about 4%. You can also see Woodside adding to its gains from yesterday off the back of that draft government approval to extend the life of its Northwest Shelf development. That stock, you can see they're up about 3%, and also Magellan closing the session up about 1.7%. On the flip side, the worst performance today in gold stocks did take a fall as investors took profits on the precious metal. Resolute was off by about 3.2%, or about 2.4% by the end of the session by settlement. But that's also thanks to some reports that a number of its permits may be revoked in Guinea. The company coming out saying it's seeking further information on that before it responds properly. Web travel also off at the end of the session, down by about 1.7%, but that was after a 12% rally yesterday and even an upgrade by Macquarie investors, likely taking a little bit of profits on that one. And miners helping put a lid on markets today. Rio was off by about 0.7%, off the lows of the day though. Ed, back to you.
Thanks, Ingrid.